Okay, here we are doing a worksheet. We're going to record some adjusting journal entries within our worksheet, and then we'll go over how we use the worksheet to help us break out for the income statement and for the balance sheet in a later video. So we're just going to go up to the adjusted trial balance columns here in this video. Okay, so we have here our unadjusted trial balance. This is what you've done in previous chapters. So you would have previously done this. You would have had your um, all your accounts listed in a trial balance, and you probably were labeling it as trial balance at that time. Well, now we're telling you this is the unadjusted trial balance because we have to do some adjusting journal entries for some timing differences. And so, in the practice of this problem for us, we just have three that we're going to do just so we can get an idea how things work with this worksheet. All right. And so we can see we have all our accounts listed and we double check that our debits equal our credits. So we're happy, everything's equal. And now we're going to start looking at A, B, and C to record some journal entries. So let's start off with the first one, A. So it's telling us here office supplies on hand is $300. So that is telling us the ending balance of office supplies. It's saying, hey, we went and we counted that there are $300 worth of office supplies left. This is December 31st, and they went and counted and they saw that that's how much is left. We can see here that we started off with $900 of office supplies, all right? So our ending balance of supplies is an asset, its normal balance is a debit, our ending balance is 300. So we have to do an adjusting entry. And so in a previous video, I showed you how to use the T account to help you with this, but we can see here, well, 900 minus 300, 600. So I must have used $600 worth of office supplies. Easy math. So we can go ahead and do a little $600 credit here for our first adjustment. That's just A. So let's go ahead and label A for ourselves. All right. There we go. I don't know why that Grammarly thing's showing up. I guess because I wrote a letter. But anyway, so we have $600 used of supplies. So we're going to decrease the office supplies by 600 so we can get to that ending balance of 300. Makes sense. Good. We're not balanced. We only have a credit here for our adjustment. We need a debit. What's that debit? Well, that usage of supplies now is a cost, so it's expense. So we have a debit for office supplies expense. Like, see, I left A, B, and C there. That's all right. That helps us. Why not? So we would have recorded there. All right, cool. So next we have is depreciation. So this is just telling us your depreciation. You didn't have to calculate it. In a previous video for chapter 3, you would have calculated using straight line depreciation method. That's the only method that you learned so far. In later chapters, you'll learn other depreciation methods. So in here, it's telling us already the depreciation expense we didn't need to calculate. That's nice of them. So our depreciation expense is actually 700 bucks. That's what they're telling me. Well, I can see right here, I have depreciation expense. I'm right in that box. So might as well record that 700. And I told you in a previous video, you don't decrease the equipment, the SPY equipment. Instead, we are going to record a contra asset whose normal balance is a credit. We're going to record that instead to keep track of the cost used up or related to the asset. So we have accumulated depreciation here. Let's slide over. Accumulated depreciation for the SPY equipment. It already has a credit balance of 700, so it's fine because it's going to keep accumulating by what we depreciate. And this time we depreciated another 700, and that's a credit. So it will be 700 here. So that's an additional amount. So if we were saying what was our balance, we can go ahead and do that. Why not? 700 and 700, right? We can handle that math. So we have 14. All right. Cool. So that's our ending adjusted balance, right? Might as well do that. Okay. So we have one debit and one credit. We are happy. We're in balance. Okay. Let's move on. Accrued interest of 800. So in this case, they're just telling us what the interest is that we accrued. You didn't have to calculate it. Later problems, you'll end up calculating the interest. But in this case, they gave it to you. That was nice. So they're telling you your interest expense is 800 bucks. Okay. All right. So I did a debit to my expense. So we can see we have 3 new debits of expenses. And then now we're saying, okay, well, we accrued it So it means we didn't actually pay it yet. We owe it. So we have some interest that we owe on. And that's my tip of saying that, oh, it's a payable. So it's a liability. And we can see here we already have an interest payable account that I left in for you. That was nice. So we can go ahead and put that in for $800. All right, perfect. We recorded our adjusting entries. We can check to make sure they equal. I think I already have a formula in here. I'm just going to copy over my formula. Well, here, I could have done, well, let's just copy that one over. So you could have done as well the sum, right? Equal sum and drag it, or do the quick key, whatever you want. The quick key as well, the quick sum key, whatever you learn in your class, whatever. So there we go. Debits equal credits. Cool. Let's go ahead and finish this adjusted trial balance and then we'll be done. Well, we can see cash stayed the same, didn't get affected. Office supplies got affected. Spy equipment didn't get affected. Accounts payable, credit, 500. Interest payable, new one, 800. Notes payable, credit. All right, common stock as well as a credit. Revenue, normal balance credit, yep. And now we got our debits that we need to record. 3200, 600, 700, 800. Oh, I messed up there. 700 plus 800, 1500. There you go. And so you can copy over your sum formula from the previous one because I took all the boxes and we tie. Yay, happy. Very good. So that is it for this video of the worksheet with some adjusting journal entries.